Alright guys, hope I can make clear what I'm doing. Basically I'm just trading time, price and liquidity, with time being the most important thing. So this is the daily chart for the ES. Yes, many people don't open this, but you should know it. Why? Because we're looking for one thing. Yesterday I was showing, like for the past 3 days I was telling you that we're gonna fill this gap over here, and we did in fact fill it. But anyway, for today, what we did is we're looking for time buy to short. So if you look at the past few days, this is equal high here, and this is an equal high over here. You see, this is almost relative equal high. This is also kind of a relative equal high over here. So what we're supposed to do is we should sweep this. What I mean by sweep is we go over it, take all these people who want to go short, like everybody that's shorting here, they put their stops here. So for the market to go down, not the retail, for the institutions to go down, they must take these millions or billions of dollars sitting in as buy stops over here. So we call this buy stop. We call this buy side liquidity. So we have to grab them. So we did grab them in fact, and there we go. We went down. But this is for the past few days. So for today, so now we have a daily bearish. I think we were in a range. Now we just got off it, but kind of we bearishly a bit. Why? Because also we're reaching May. May is a seasonality month, which means just like the flu happens in the winter. Usually, most of the months, not all of them, but most of the months, the May time is where every stock in indices or any asset actually, they start to go bearish. They start to go down. And in fact, this was gonna happen now. We're reaching May in like maybe a few days. But anyway, so this is the liquidity. We grabbed it, now we're going down. But this is past few days. Now let's go to the 15-minute chart. Let's look for the same idea. So here, so what I did is I went on to 15 minutes. Exactly, I'm going step by step. So this is what I exactly do. I look for today is the 6. So I look for the opening. So to confirm my bias and stuff, what I do is I go to the 12 p.m. midnight. This is supposed to be a midnight. New York time. Always put on New York time. So this is the midnight candle, right? We mark it. We mark the open of it. So this is the open of it. This is we can label it. So this is the candle. So what we expect, if we're bearish, what would we expect the price to do? You know the power of 3. The candle opens. The candle opens. If we're bearish, it will manipulate it. It will accumulate here. It will manipulate up to grab all these stops, and then it will move way down. Right? If it's bullish, we'll start low. We'll go short a bit, and then we'll go up. So now, since we're bearish, what we expect is the price to go over this thing, to go over the opening, and in fact did, and then it goes down, right? So same thing, to further confirm our bias, we have to look at the 8:30 a.m. 8:30. This is where the algos start to work. So where is this? The 8:30 a.m. candle, and let's put it here, and there we go. So the price did went up, and now it's going down. So it confirmed. It's supposed to be at the open. So it went up, and then it went started to go down, right? This is the 15-minute chart. So now we can find our bias, right? But we have to look now for liquidity, for that liquidity to get us down here. That was the daily liquidity over here, but that's too far away. So we have to look, how do we find liquidity? We look for, best thing you can do is look for equal highs. There's a beautiful equal high over here, and beautiful equal high, triple equal highs right here. So let's go ahead and mark them. For sake, I'm just going to use this rectangle and put it like this. So let's put it here. This is where we swept it. We swept it here, and we swept this liquidity, this equal high over here. I have the magnet on, so that's why it's not letting me. Alright, there we go. So we swept this liquidity. You can call this again buy side. I didn't show, but because I have to open. Look like this. Alright, so we swept it over here, and now we have them moved down. So what we're doing at 8:30, you never take trades before 8:30. So go to 5 minutes. This is our liquidities. We swept it and we went down. But now what do? We wait. Let's go to the 1 minute. You can go to any time from now, but I'll go to the 1 minute. That's where I did my entries. So what I did is I waited for this price. This is the 8:30 a.m. candle. So we had this our power tree up and then we moved down, right? We had the same thing with the midnight up and then we went down. So now we have to grab this liquidity here in order to go down. Otherwise, because there's millions of orders they're gonna do, and only these buy stops, these highs are the where you can they can buy into. So we swept it. Now what do we look? Once we swept it, we wait for the price to go below these liquidities and then form a structure, not a structure, a shift in marketplace. So how would you know that? This is we get uptrend right now. This is our low. We have candle here and candle here, and this is the one lowest. So this is will be our where we will enter our trade. This is not where we enter our trade. That's where the market is shifting, right? We can go ahead and so this will be MSS. This will be our MSS. And then what do we do? But does this MSS form, in order to have a MSS, you have to break this in a displacement, like a really strong candle. This is a strong candle here. But do we form a fair value gap in here? Yeah, indeed we did. But right here, you see it? Price went to it and it went down. And then went up a bit and then went down. But would we take this? How would we know if we take this fair value gap? We just have to look at, take your Fibonacci from the low. Oh, you're shorting? Sorry. You're shorting, you go from the top. Where's the top part from here? Here? All the way here. So we are above equilibrium. So we're in the premium zone. So to short, we must sell in high prices, in the premium prices, and then buy in the discount. This is premium. So you can take a short here. I entered one on this candle here. Once it went inside of it, I took a short here. Yeah, sorry guys, the sound, something went on, so just continuation of the video. So yeah, the price went up here. I entered a contract, but as you can notice, just so I don't miss out, just so you can notice the price. The time is reaching 9:30, and this will be a lot of volatility. So just like how we did with the midnight candle and the 8:30 a.m. candle, we expected the power to go up. We expect this thing to go as well on the 9:30. So that's why the price went up a little bit. And then what do you think? What do you see here? We see another. This is a low. This is lower than lower than this and this candle. So this is the short-term low. And what did we form? We formed a market structure break here. Look, in a strong displacement, big candles. It even formed a gap. That's how strong this move is. And it went all the way down here. Look, in like a few seconds. This is, if you check it on live, you'll see it going down like crazy. But we do not enter anywhere here. What do we do? What do it form? We have an MSS. MSS is only formed if we took these liquidities, as it did in liquidities, and it forms a displacement from space energetic candles, and on top of that, it forms fair value gap. It's the simplest thing you can do. So where did we start? This is the candle, and this is the end of this candle, and this would be our fair value gap. So we went to price. I wait for the price to went down here. We went up here. I entered somewhere around here. I usually put limit orders, but I was watching it live, so I entered somewhere around here. And then I targeted just a few pips around above the highs. And I targeted Well, technically, I didn't target anything, but you could target this, any swing low. You can target this. You can target this. But this happened so fast. This happened so fast. The price went down. I exit my trade like around somewhere here because it was so fast. It was somewhere around here. But suppose you missed this opportunity. Suppose you missed this opportunity, one opportunity too. What do you do? What do you do? Well, what did this do? This broke this structure here. So we formed another market structure break over here. Bearish one. Sorry for that thing. You can the drawings. You guys can draw better. I'm just showing you for the course of this video. We formed another one. This is actually the major one. This is a minor one. This is the major one. So what do you do? Well, did it displace? Yes. Did it form market structure break? A market structure shift? Yes. Did it? Another word for this change of character. Did it do displacement? Yes. Strong candle. Did it form a fair value gap without imbalance? Yes, it did. Right here. This would be your fair value gap. So if you miss this option and this option, you can enter anywhere around it. Even on this candle, you could have entered. But depending on how much you can weather, you must be able to weather all this movement. You stop if you're gonna put your stop here. But luckily for us, just like how we use this Fibonacci, we can close it and we can put it on the new high, and then put it. Where did this go maximum down? Up to here, right? So what would you do is, if you don't want to enter here because it's too much of a risk, but it's a big fair value gap and it's going on along our continuation of our bias, what can you do is, you can wait until the price enters above this 50%. So this is discount, this is premium, this is the equilibrium. We want the price to go a little bit inside to the premium side. This is where we would like to sell. So you could actually, instead of, if you cannot weather this much entry from here, you can actually enter anywhere around above the 50. So when did they go above the 50? Around here. So you could have entered here. You saved some ticks. Your stop loss would have been smaller, and then boom, another where is it? Let's see, you entered around here. Put it here. I don't know how much you can weather. But this is actually on the other block over here, so you can just put it right on this down here. But anyway, where would you aim? You can aim your first target over here. That's another 22 ticks. You can aim for this. So yeah, where would you aim actually? Many ask people that. Just like how we took buy side liquidity, we look for equal lows. This is a beautiful equal low. So this time it's called set side liquidity. So everybody who's long in this movement, they're gonna put a stop here. And I'm talking about millions and billions of dollars, not just retail. Another target would have been here. Another target, these equal lows here. And did they get any of that? Holy damn, look at that. Look at that. You took TP1, TP2, TP3, TP4, and now we're all the way down here. So enjoy. You could have held. I would have held, but I was too scared because there's news on it. I would have held from here all the way at least till these, and this gave you a move of 83 ticks on the EMP, which is 50 times leverage more than the NQ. Damn, enjoy.